What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis on Sundays to provide you entries and exits for the stocks that I'm looking at for the week. And I also provide a daily pulse on the market on X at Hemi137, so you can check me out there as well. But before we get started, remember to hit the like button, as we have gotten tons of information to discuss this week and even more information to talk about what is coming up next week, as next week will be even a bigger week, despite all the wildness that's been going on just over the past week. So as we get started here, let's take a look at this past week. Obviously, we had the inauguration that just occurred on Monday. Ever since then, Trump has come in and essentially had a flurry of executive orders come out and is really draining the swamp and trying to reduce a lot of the deficit. And he's doing it quite rapidly. It's hard to believe it's only been a week, and the amount of changes that he's implemented compared to the last administration or several administrations. Even his first term is absolutely wild in what he's doing, and he's definitely making change, and change that people want to see. Despite what happened last weekend with what was going on with the Trump coin and Melania coin, there's still a lot of speculation around that. I have a new thesis on that, just in general. Just what I feel is going to happen there is that could be used as a potential replacement for the Federal Reserve. I think if this debt bomb tries to go off, I think it could be used for that. But again, we will see. There's a lot of speculation around it. I'm not really one to judge until I know something. I believe there's something else going on for sure. The question is what is that, right? So you want to make sure that whatever you're doing is I think we need to give it a little bit more rope, especially after the last week and what we've seen. He's definitely trying to take care of the American people. I think that is what is being shown. But again, at the same time, right, you still have to be mindful of the current situation and not be overly biased on anything as well. So, but with that being said, so just these are just some of the things that he has done over the past week. Again, there's been so many executive orders. We're trying to keep these aligned with what aligns with the economy and the market, and how that's going to affect your potential investments moving forward. So, the $500 billion infrastructure bill plan based around AI and AI crypto. That was one of the biggest ones that did drop on Tuesday. So essentially, about a day and a half of being president, he dropped this massive package focused around AI and crypto. Now, when he did talk about AI, the biggest thing that we noticed there is he was really emphasizing, or I should say, the Oracle CEO, which was there, the Oracle CEO of Open AI, and also SoftBank, which was backing a lot of this, or they were essentially pushing the narrative that AI can solve a lot of diseases. And so that was one of the biggest highlights there, along with this massive package, in that it can employ a lot of people, as a lot of people were worried and concerned about essentially having no work because AI taking over everything, robotics taking over everything. But I do believe this package would definitely help with that, and that's what he tried to emphasize there as well. Removed from WHO and also removed from the Paris climate change. Now, getting removed from WHO saved us about 500 million. Apparently, China's only been paying about 1,000 million, despite them having a much larger population than we do. But ultimately, again, it's not a fair agreement. So he pulled us out of that. The Paris Climate Change Accord, or not change, but the Paris Climate Accord, is another huge program that he pulled us out of. And that is almost $1 trillion from what has been disclosed. Again, I think he's also trying to stop a lot of the windmill creation, as it costs a lot more money and also uses oil and everything else just to maintain these large windmills that really don't produce enough electric energy, that we need to focus more on nuclear energy at this point, especially with the massive amount of power that you're going to need for AI and crypto in itself. And that was a big highlight along with that package, as well as energy and AI infrastructure are going to need to be built out more so than we even have to be the industry leaders in AI and crypto themselves. So he also removed all the DEI program, which has saved a lot of money there, and redirected funds for illegal immigration to disaster relief. Obviously, the hurricane that hit the southeast and the fires in um, California are some of the major things. He's trying to redirect a lot of that money that's been spent out there. Reform or removal of FEMA. That is one of the big discussion points that essentially came out on Friday, late Friday as well, was a big discussion point there. Banning CBDCs and just going straight to what has currently been implemented. A lot of the underlying infrastructure again is implemented to an extent, so the average everyday American is aware of crypto. But again, there's been this narrative that it's a Ponzi scheme and all these other things. Spoken out of one mouth, while the second, on the same breath, they're again building out infrastructure. They've been doing that for a couple of years now. Even the Nasdaq talked about NFTs back in 21, and they've ever since, even before then, have been building out infrastructure. PayPal has a lot of infrastructure. A lot of these payment systems already have it integrated and have been working on that for a while. Now, with all these big changes that that occurred in general, I should actually move this one up here, but the Doge clock has now been added to the U.S. debt clock, and they are already saving $17 billion just after 5 days here. So that's the most recent number here is 17 billion. So there's with all these massive cuttings that's occurring. Again, the biggest problem is spending, and this is why they invited Javier Milei to come talk about what he's done, because with their high inflation that they've had, he's done a 180 and done something that people didn't think was possible. And so again, when he came into power, he again got rid of a lot of wasteful spending, and we're starting to see that with Trump, and it's only been the first week. And so it's hard to keep pace, and that's what a lot of people are saying is this, all these executive orders that are going on, it's hard to keep pace, but ultimately understand that he's doing a lot of great things. And what I talked about is when he came in office, you had to see what actions were occurring. And it's not about what you talk about, it's about your actions. And he has been all action this time around. Not that he wasn't much the first time, but I think he was a lot more handcuffed because he wasn't really sure what he was coming into that first term. But now it's definitely apparent he has a very, very good strategy coming into this one. Again, it's only been a week. It seems like it's been a lot longer than that, just because of the amount of action that's been taken. So much has been fixed since he's been in office just within the past 5 days. So with that being said, we did also have Netflix. And something I talked about is the subscribers were going to be important. And somehow Netflix subscribers exploded 18.91 million. They were only anticipating about 9 million. So the fact it came in at 18.91, I guess somewhere in the Southeast Asia, there was an additional about 10 million there almost, and which was wild to hear. And again, I think a lot of these numbers are kind of sus in my opinion, that Netflix keeps getting all these millions of users. I don't know where they're all coming from again. But like I've stated before, the reason why we watch Netflix is because of the subscriber count. And when people are looking for cheap forms of entertainment, which right now it's not becoming cheap, because again, they increased prices yet again. But it tells you that people need cheap forms of entertainment, and that's Netflix and binging at Walmart are essentially where the consumer is at. So the consumer themselves, the average everyday American, is in horrible shape. But on the same token, you're providing, essentially the government's been providing quantitative easing for banks and essentially everybody else. And the underlying infrastructure, and something I talked about, is the illegal immigrants in these sanctuary cities. The reason they want to build these out is because you can charge them less than the average American for a lot of labor jobs, because again, they're not Americans. They don't get a minimum wage. So you can essentially still pay them pennies into the dollar to produce right now. And this is why you're seeing a lot of articles out there as well right now that are saying that if the U.S. or Trump deports all these illegal aliens, is that you're going to start losing a lot of production numbers, which could be true to some extent, but we don't really know. And this is what I've talked about before, that right now you're in this gap. What's going on with the current implementation that you are trying to get to use AI and humanoids, but there isn't a lot of great use cases. There's very few actually great use cases. And I think also why they pointed out how AI can help with healthcare and discovering new drugs and diagnosing people and stuff like that. Those are great use cases, and there's not many of them. I'm sure there will be tons of them in the future, but right now, again, you're kind of in that phase where the infrastructure is being built out. Now you got to start producing, right? So, and so with that being said, again, we will see what happens there. But you thought this week was wild. I'm just going to say wait till next week because it's going to get a lot more wilder. So with the debt clock, it's great to see that. That was something that was added there. And then, like I said, subs, we'll see what happens. But again, you're in that gap where we need to figure out something. And maybe that's why we're importing all these illegals, because we knew we were in trouble with a massive amount of spending. So we'll see if Trump can switch it to a point to where the massive amount of reduction in spending will ease the inflation and just fix it. But again, there's so many trillions of dollars that it's definitely not an overnight kind of session thing where it's just going to be fixed. It's going to take time. But we'll see. I mean, he's definitely in the right direction there. So with that being said, we also had the Japanese banks raise interest rates to 25 points. That was critical because the last time they did that, so that essentially puts them at 50 basis points. And the last time, why it's so significant, because the last time they raised it, they caught everybody off guard because of the fact they've gone about over a decade with negative interest rates. So essentially, what people would borrow the yen, swap it to dollars, and then they'd go out and purchase stocks, or they'd go out and purchase land in America, whatever the case is. But as long as that investment was greater than what the borrowing costs were, they were able to put max leverage. And that's why essentially you had the yen carry trade explosion a couple of months back, because people are just way too overly leveraged. And then Japan came out and raised interest rates. So this time it happened again, but people weren't as exposed this time because I think it didn't catch them too off guard. But you have to understand that, again, because the world in general is in a depression. And the only reason we're not really seeing it because we are still in the same token quantitative easing on the backside and bailing out banks, but the bank term funding program is essentially out of money. And this is what we're about ready to see, is where the actual health of the regional banks are as we get rolling into this next earnings statement. So with that being said, we also got SEC Crypto 2.0, new crypto task force. So there's a lot of changes with this. We lost Gary Gensler as well. So that's another whole other thing in crypto. And like I said, the president's focus is on AI and crypto, and that's the future. So a lot of positive signs for crypto. Also on Friday, Grayscale will try to file an ETF for Solana, ADA, and I think there was a couple other ones, but those are the two I remember off the top of my head. So with all that being said, that's a massive week. And again, I didn't catch everything. I just try to get the highlighted ones that were really going to make some sort of impact on the market. And again, that's ultimately what you want to do. This is why I talk about how an event has more weight compared to other events. And depending on the general market sentiment, sometimes it may have war, sometimes it may not. I know the way I'm explaining it may seem a little bit overly complicated, but ultimately it's very simple. Just understanding the current economic environment and how things are rolling out and what events have led to there could essentially enhance the impact of a specific event that typically would not. So, but this week is going to be a huge week. So not only is it the Super Bowl week of earnings, you also have Wednesday, you have the interest rate decision, which at this point, we're not expecting to do anything with the rates. They're going to be paused as of right now. Again, and so more so right now, what they're trying to do is wait for them to pause interest rates and see what was happening with what would happen with Trump. Once they get an idea of what executive orders have gone out there, they can kind of make a better decision. And I think he's still moving so fast that I don't think they're going to do anything. The odds are very low that they're going to increase or decrease rates at this point. But Powell has definitely emphasized they need to start cutting. And the problem with that being is you're worried about inflation already. So if you're going to start cutting, that provides the average everyday American, which is the only person that really hasn't gotten quantitative easing at this point, needs it. And they need it badly because, again, unemployment is skyrocketing through the roof. but again, the Fed are reactionary and they're moving off of what the numbers are saying, and then you're seeing all these revisions to show that the average everyday American is in horrible shape, working 2 full-time jobs and still can't provide food or shelter for themselves because of the high inflationary environment in which we're in, especially the housing industry, insurance, auto loans. All these things are just way overpriced right now, that it's hurting a lot of people. And this is why we saw I think it's about 17 to 18% growth in homelessness over this past year, just because of that fact. And then also understand that the credit card charging has gone up by 50% just over the past year alone. So people are living off of credit cards and buy now, pay later. So again, Tuesday I'm not expecting much from the interest rate decision, but you also have Powell. And so that's what's going to be important, is what he says. There's a lot of tension between him and Trump, and that, again, two separate entities. This is why he's not the Fed. But again, there's a thesis that they may be trying to abolish the Federal Reserve and move it into the Treasury. We'll see if that's the case or not. But ultimately, again, we will get a lot of potential answers on Wednesday at 2:30 Eastern Standard Time. So not expecting much from the 2 o'clock release of whatever the interest rate is decision. But again, Powell, when he starts answering questions, a lot of that stuff's going to come up, and it's going to be very important what he says, because he can move markets. Thursday, we also have the GDP numbers. So we'll watch and we'll see what happens there. But that may have some significance, just because I think a lot of this time right now, we've seen a lot of pencil whipping. And if we're starting to do a lot of cutting and deporting, that may have a huge impact on the GDP. So we do want to watch that. Again, GDP is more going to, I think, have more of an intraday play. But if we start getting a lot of big events occurring back to back to back, again, that can continue to draw more fear and add more weight to certain events if something occurs. So that's what you have to be mindful of. Then on Friday, we do have core PCE as well. Again, intraday move there. Core inflation is going to have more of an impact, like I said, than core PCE, but it's good to just put that on there to be mindful of that as well. And then this upcoming week, we do have the monetary policy, obviously. We just had core inflation, so our next one is until February 12th. We will be reviewing the upcoming schedule. Again, very, very big week this week, so just keep that in mind. Now, this is something that's really interesting. I always talk about these expected moves. It's only 82, which is slightly higher than average, but not that much. Again, a lot more is going to be priced into individual stocks. Now, Tesla has earnings. They're up 40 points. They're pricing at 40 points for Tesla. Boeing also has earnings, but it's only pricing in 8. JP Morgan just had earnings, but it's still high. Typically, JP Morgan is roughly around 4, and it only moves about a tick. So the fact it's up by 2 ticks is concerning in itself. Again, if regional banks start selling off, and this is what I talk about, if you get a sympathy play and regional banks start selling off because of maybe a lot of failures or something like that, you may start to see these banks sell off. So this is again why they have to price in a little bit more because of that. But if you start getting fear there, then you could potentially have a sympathy play off the major banks this week, or even related to any IT that is not reporting this week. You can take advantage of that as well. So good information there to be paying attention to for sure. So this week, it's a massive week. This is a Super Bowl week of earnings. We haven't seen this massive week since probably about 2 years ago when we started getting high inflation reports. And that essentially caused a lot of these things to gap down. You have to understand, too, coming off the pandemic, a lot of these companies were buying tons of stock because there was so much demand at the time. And then obviously the demand was eventually going to kill off. And so that you had to normalize markets again, and going through that normalization has really wrecked just our whole economy in general because of the lockdowns that we went through. So with that being said, Monday we start off with SoFi. SoFi is one of the big ones I'm watching. Again, you're going to need to be watching these banks for a lot of potential plays, and what could play out is we might see a lot more failures as we continue to move through this earnings cycle. And then again, they don't have that extra pot of money to bail themselves out. And so that's what's really important there. Tuesday after close, not really watching anything here. It's always going to be just banks earnings. I don't know what half these banks are, but again, if they are regional banks, they're going to be under the microscope coming into Tuesday, which we have Boeing, which is a big value play. Again, I don't even know how they're priced in where they currently are, but they are. And if they hit some wild talking point on Tuesday, I'm sure they will. I use them always. If you follow me, I use them always as a value gauge to see where the value is. So that will be really interesting there for Boeing. So we'll be watching that there. Um, Lockheed Martin, obviously, with all the money that's gone out to Ukraine, expects some of that money to come back to the defense. Obviously, Ukraine has to purchase those weapons from somebody, and it's going to be from our military industrial complex. So you need to be watching some of those. Those might do very well. Again, a lot of banks, largely concerning. Then after close, we have Starbucks. Starbucks has been continuing to get crushed. I do like the CEO of Chipotle that came over. I think he's going to turn Starbucks around, but I think that story is going to take a lot longer than people expect. So just keep that in mind. Then again, tons of banks on Tuesday evening. And then Wednesday, ASML, expecting them to do well only because TSM, the semiconductors, did really well. So that could be a prop up there that can hold up the market. We got T-Mobile, again, another defense here at General Dynamics. So again, a lot of just bank information, which is going to be interesting there. Wednesday is when it's going to start getting really wild because you got Tesla, Meta, and Microsoft reporting, and all those hold a Meta and Microsoft, I believe, hold about 5% alone of the index. Tesla holds about, I want to say they're around like 2, maybe 3% at this point, but those will be really big. And then we want to be focusing on Tesla's humanoids. Meta, I think, is going to do very, very well in general as well. Just because of all the things that they're doing. Microsoft, obviously, with OpenAI, expecting them to do well. If they do bad, that could be, if you the three of these do bad, especially if it's between Meta and Microsoft, that could really hurt them really bad. Lam Research is as good from the chip sector as well, so it'll be interesting to watch to see what they do. ServiceNow is another big one as well. And then coming into Thursday morning, UPS is going to be big because, again, pulse of the market. They're already temporarily closing locations because, again, they're continuing to hemorrhage money, and nobody's sending anything. The average everyday American, they're not bulk. Again, we're going through another large phase of layoffs, and so that's what you need to understand. And Meta is essentially also removing the bottom 5% of productive employees. So that tells you how bad things are getting. So now, just a couple last earnings cycle, they were letting go of people that were using their food cards for buying like laundry detergents or something, and then now it's the bottom productive employees are getting let go at this point. So again, still doing very, very bad, and continuing to watch that to accelerate as the current administration has to do a lot of changes to try to help with that. But again, it's not going to be an overnight session. Still anticipating some sort of major event to occur to try to throw things off. But I think that's also why, again, Trump is taking so much action so quickly to try to prevent any of that stuff from happening. And also why they pulled us out of WHO and essentially also turn off any communication with the CDC and those kinds of things as well, just to try to not essentially have another pandemic, because the bird flu is a big thing that's been going around there as well. So, and then obviously Caterpillar will be big to kind of give us a gauge on where people are at. Housing is doing really, really bad right now. It's been a decade long, even worse, longer than the financial crisis. The demand for houses, people just can't afford anything. They don't have no money. There's absolutely hardly zero money in the system right now. So wild that that's going on. But CAT is definitely interesting there. And then Thursday evening is going to be another big one, as you have Apple, Intel, Visa is another big one. Apple expecting them to do really, really bad. Probably also why it's placed on the Thursday, because if we have to go another day, if this gaps down the market, hopefully these three do well. That's kind of our anchor for the week, is these three. If they do miss for some reason, that could be really, really bad. So And then Visa is another big one we want to be watching on how their growth rate is, because until their growth rate slows massively way down, our economy is not going to be doing any better. So we do want to be paying attention to all those companies as well there. And then obviously we have a bunch of defense contractors in here and some oil in here, which again, oil is not doing too hot right now. So there is an Amazon in here. I thought Amazon was reporting, but it looks like they shifted that into the next week. So this week is still very, very big, the Super Bowl week. Again, you're holding a lot of weight between these three companies and Apple. So that's 4 of the 6. They did shift Apple or Amazon out into next week. We also have Nvidia, which again is not reporting earnings for about a month. Again, that's kind of our anchor. So if things go sour, that will kind of keep us afloat until they at least report. And then, I mean, things can get bad before then, but if they're mediocre, if it's looking bad, but I mean, they're not really reporting that, you're still seeing weakness. What can happen is Nvidia earnings, when waiting for that, can still keep us somewhat afloat, because now it holds about 6% of the index, which it wasn't like that. But given this whole push for AI infrastructure, it's now essentially its weight has become much larger in the indexes. So with all that being said, again, wild past week. This week is going to be filled with tons of information. It's trying to capture everything that is going to actually matter in the market. So just keep that in mind. But definitely exciting. This is what we live for. If you follow me, you know this is what I'm excited about. Is these times where you get these massive waves of information. And again, try not to get lost, because there's just so much that you might miss something. And this is where you can essentially put in failed banks because of that fact, because there's just so much going on during these times. And that's what we try to focus on, is try to capture those things that are going on behind the scenes that aren't in the headline news. Because again, the algorithms are all driven off of headline news, and they obviously are aware of this. This way, when the revisions come out and stuff like that, you don't get any kind of major impact on the market, even though there's 1.6 million jobs that never existed. But that's okay, because as long as we report that it beat expectations, that's what matters, and not the fact that you've actually been in a depression for this whole time. So but with all that being said, again, remember to hit the like button, and I will see you guys on the next one.